Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're talking to our friend and colleague, Robert Sinn, also known as Goldfinger on CEO.ca and CEOTechnican on X. Robert is the publisher of Goldfinger Capital on YouTube and Substack, and we will put some links down below so you can follow along with Robert's work. Man, it's always great to get you on the show to talk the macro, to talk the micro in the resource sector. When we talked last, I was just looking at it. It was in April, kind of in late April, and we were just starting to come out of the period post Liberation Day where the tariffs had been paused. The markets were starting a V-shaped rebound. I don't think anybody realized just how much the markets would rebound because since April, the general U.S. markets, the Nasdaq, the S&P 500, have all rocketed up to all-time highs again just over the last few weeks. And we saw the precious metals rebound. We saw copper rebound. We saw platinum break out to levels it hasn't been out in 14 years. Same thing with silver. And we've seen just an all-around reflationary trade over the last couple of months. I guess with the backdrop that now we're at the period where we may see the tariffs be put back in place. How does that play into inflation? And we've seen a lot of back and forth with Trump and Powell about when the Fed's going to cut rates. So if we start with the macro, Robert, how are you looking at the lay of the land?
Yeah, well, thanks for having me back on, Shad. A lot has happened. I mean, if you think about it, we had the Liberation Day in early April. We had the tariff tantrum the first week of April. It seemed like the world was coming to an end. The Treasury yields got blown out for a couple of days there. And then we had the Trump about face, the flip-flop. And we've had, it seems to be this is the way of this new administration is it's the flip-flop, it's the keep everybody on their toes, keep everybody guessing. But at the end of the day, it's pretty clear that Trump 2.0 is limited in terms of what it can do with China and the European, Union in terms of trade. Big trading partners cannot have 120% or what have you tariffs on these major trading partners. But it's a game that's being played, and the market has come to terms, with the game. In early April, it was new, it was fresh, it was shocking, it was jarring, but now we've had enough time to digest this, 100 days basically. And obviously just look at the S&P 500, as you mentioned, look at, the NVIDIAs, the Microsofts, the Amazons of the world, anything that's big tech or has to do with AI is just absolutely, ripping. And so being bearish in April for too long was the wrong move. And I think a lot of people got caught in that short squeeze. But now I would say at this point, anybody that was short in April has definitely been stopped out and they've covered. And so now, big cap equities in the US are back to being a bit frothy again. But I'm short one stock right now, which is Carvana. Just a little speculation, just feel like this is way overvalued. And the subprime auto sector could keel over and die here fairly soon, but it's a small speculation. I'm not largely short. I'm not net short at all. I'm actually net long, very much net long, and that's because the big beautiful bill, very stimulative, front loaded fiscal stimulus, 2025, 2026, into 2027, and then when there's a tightening of the belt that starts in 2028. Well, Trump will be, within 12 months of his way out, and probably they'll walk back some of that tightening with a new president or a new Congress, et cetera, et cetera. So, when the BBB passed 3 weeks ago, that was very bullish. And now, with this Trump jawboning Powell every single day, the Treasury Secretary has gotten on the bandwagon. He's bashing the Fed, saying we have to overhaul the Fed. This is a little wild. It's very much end of fourth turning kind of stuff that's happening here. And I'm a hard asset bull, as you very well know, and which you are as well, and probably a lot of the listeners are. Even though prices are higher, it's hard not to stay very long the precious metals and junior mining sectors here with what's going on with Trump 2.0, the threat of firing Powell somehow or finding him guilty of fraud on the renovation of the Fed buildings. That's very scary stuff. That's very dollar negative kind of talk. That's the kind of event that could send the dollar plunging and treasury yields soaring, and you would want to hold your gold, silver, and platinum very close to your chest in such an event. And then just in terms of all the executive orders, the tariffs on copper, tariffs on graphite, yada yada yada. This is all very bullish for US mining. And I have to think that cooler heads will prevail with Canada and Mexico on trade. Maybe there's going to be some adjustments there for sure in terms of steel and lumber, et cetera, et cetera. But I kind of feel like we have to find a way to the North American fortress, so to speak, and sort of, find an alliance, with Canada, especially in terms of hard rock mining. So that's my take, a quick and dirty summary of the last 3 months.
Well, man, it's been a wild ride, Robert. And yeah, there's so many forces at pull here at the same time. Do you find it odd that the precious metals are up so much in the face of the U.S. stock markets ripping to new highs, cryptocurrencies ripping higher? I mean, look at Bitcoin has also made new highs. Is it just a everything bubble because the dollar is selling down? Because you brought up the greenback and the U.S. dollar has sold down quite a bit over the course of this year. Is that the big force, or why are the precious metals doing so well in the face of a risk-on environment?
Because risk on in this environment, with this administration, with this macroeconomic setup, with this set end of fourth turning circumstances, it's the most bullish possible you could have for precious metals. So you got to break that correlation, which was always kind of a faulty correlation anyway. I mean, think about 2020 when we came off the bottom at the end of March, gold ripped higher, silver ripped higher, and the S&P also ripped higher, right? And that lasted for about 4 or 5 months in 2020. So there's been plenty of, periods throughout history, especially the last decade, where gold and the S&P have been positively correlated. I'm not smart enough to be able to call a top on the S&P. I'm not sure anybody is, quite frankly. But I'm just going to keep it simple, stupid, and stay long precious metals. Stay long my three favorite ones, gold, silver, and platinum. Have a little bit of exposure to my favorite copper miners, in the US or Canada. And yeah, I mean, you just have to think, Shad, what would happen on the day that the Treasury Secretary or the President get their way and get Powell out in the next, let's say, 60 to 90 days? What would happen in financial markets? What would you want to be long of? And I think you need to really think in those terms. I'm not saying this has to happen. It could be a game that's being played, but it seems like these are two very powerful men, and they have very strong will, and they want Powell out, and they want their guy in because they have their game plan for how they want to reshape the economy and reshape the global monetary system. And Powell is an impediment to the way they see things right now. And so it's a scary situation that is building up to a climax, in my opinion.
Yeah, it's going to be interesting to see how it resolves. I have seen some things over the weekend saying that Scott Bessent has talked with Trump about not firing him, but these guys are on again, off again, and you want to have some insurance policy in place with your precious metals in case there's some things that ripple the financial markets. Well, let me have you put your technical hat on, and when we look at gold, as we recorded this today, we're over 3,400. When we look at silver, we're over 39. After cooling a little bit, both metals, it seems like they're back in a more bullish posture. When you look at things maybe the short to medium term, how do you look at it? And then what do you think the catalysts are to keep gold pulling the rest of the precious metal sector higher? Because it was gold that led it all higher, then it rested as everything else caught up. And now that silver and the gold stocks and silver stocks and platinum have started catching up, what's the catalyst to send gold even higher?
Well, I mean, the catalyst to send gold above 3,500 is just everything I just talked about, quite frankly. And it's very clear that Trump 2.0 wants a weaker dollar. They're not going to send the dollar crashing 20% over 30 days, but I wouldn't be surprised if when we look back, 2, maybe 3 years from now, the dollar is substantially lower than it is right now against many major, currencies around the globe, and definitely lower against Bitcoin and definitely lower against gold, right? So I don't think that the bull case here for gold is super complex. It's just simply an alternative currency. And the number one hard asset that central banks are fleeing to diversify, like away from the dollar. Quite frankly, it's really that simple. And again, China continues this stealth accumulation. China's being very quiet, very smart. There's not a whole lot out there about gold in China, especially the last couple of months. They seem to have really laid back off the bid since it hit 3,500 in April. But you can be sure that China, the People's Bank of China, continues to accumulate gold via the OTC market in London, and they're shipping dozens and dozens of tons of metric tons of gold bars every month to China from Europe. And they're not, it's not official, right? It's a stealth accumulation that continues apace. Well, gold technicals. So, like the weekly, the daily chart of gold, this has been a beautiful consolidation here, May, June. And now it's usually around this time, like early August, is usually the time when gold gets re energized, gets a stronger bid back into it. And usually we rally right into to Labor Day. There's a strong seasonal pattern over the last 30, 40 years where gold has this kind of nice rally from early August to Labor Day, and then very often has a pullback right after that, right? But we're sort of in the sweet spot here, or we're approaching the sweet spot, and boom, here we are today. Gold is absolutely ripping up 2%. And silver, yeah, I mean, silver has taken over as the leader, or you could say platinum has, but I'd probably say that silver is the new leader. And this is the way a precious metals bull market cycle evolves. It starts with the big one, and it starts with gold. It starts, with the one that the central banks buy, and where big money can, accumulate a lot more of gold. And then it starts to get a little more speculative, and the gold silver ratio comes down a bit. It was over 100. Now I think it's back under 90 now. And this gold silver ratio could drop to 75 as this bull market evolves. And platinum, just that consolidation, that range bound, that big rectangle it formed over the last 4 years, and every rally had been capped around 1100, and it just blasted through it because this is a precious metals bull market, and it was technically ripe for a breakout with that kind of a 4-year base. And if you go to like a quarterly chart, you could say it's like a 15-year base. So it's from the technical standpoint, gold is acting very well. The silver breakout is powerful, especially when you zoom it out to like a monthly or quarterly chart. It's incredibly powerful. And I don't want to be so crazy and say like silver's going to $50 this year, but it's possible. It's actually possible. But hey, $40 isn't too bad of a price either. So, this is a nice time to be a bull in the precious metals and the mining sector. This is our time to shine. We've been waiting for this. So don't throw away your metals and mining stocks just 2 months into the bull market.
I think that's a great point because we've also seen the exact playbook you want to see happen pan out where the largest producers of gold moved first. And then you saw things filter down into the mid-tier producers because their margins were expanding. Inflation wasn't going up nearly as fast as the metals price, so you have that widening gap, better revenues. I'm sure as we keep getting more of the Q2 earnings, we're going to see some of those record revenue news releases come out. But things now, Robert, have filtered down into the better development plays have been running, and even the not so great development plays have started running, and it's now all the way down into the exploration plays getting a bid. So you've seen the juniors come alive. You've seen the TSX Venture Exchange finally get off the mat and start moving higher as a collective group. And we've seen the silver stocks really play catch up along with the silver price. So right now, while the juniors are moving, I think the tendency will be for people to say, oh my God, I've got positions in the green. I better take the profit. So let's talk a little bit about how your strategy will work for not selling too early. But then are you doing anything in your own portfolio to kind of filter down into maybe a little bit more risk on, even in the mining sector?
Well, I mean, I'm a risk on guy in the junior mining sector, period. I like the really early stage plays where it's pure exploration, right? So it doesn't get more high risk than that. So I'm already a high risk guy. But in terms of going down the food chain from like the seniors, the mid tiers, and then the juniors, well, the seniors have been in a consolidation since June. If you look at the chart of Newmont or Kinross, I mean, they've basically just been sideways for the last like 6 or 7 weeks. So the seniors are actually ripe for another leg higher here. And they'll start to, report the Q2 earnings starting next week. So we'll start to get a lot of earnings. And, there's a lot of guys that you can follow that are talking about just the profitability of the senior gold miners, like a Newmont, like a Kinross, like a Barrick, right? Like these companies are spitting out massive amounts of free cash flow. With Newmont, I think we're at the level where we're talking about like $1 billion or possibly more per quarter of free cash flow. Now, obviously, the market cap is higher now. The market cap is over 60 billion, so the market cap has kind of moved up along with that free cash flow. But still, you can do the math. It's not like it's super expensive. It kind of just, you have to have a forecast on what the gold price is going to do. So if you think the gold price is going to continue to stay here or trade higher, then you can make a really good case that a stock like Newmont is still very cheap. And then the mid tiers, I think we see more M&A here, right? There's a lot of companies at like that $1 billion market cap area with maybe they generate like 200,000 ounces or 300,000 ounces of gold per year. But size matters, especially in the 2025 market environment. So I think one of the themes that we could see here in the second half of 2025 is consolidation among the mid tiers, right? Those billion or $2 billion market cap companies, that it makes a lot more sense if they get put into one entity that's much bigger. So instead of having 200,000 ounces a year, maybe you've got 500,000 ounces a year, right? And then you get in the big ETFs, you get all those passive flows, and you also get to cut your corporate overhead by slashing basically half of the total payroll of the two entities, right? So I think it just makes sense. It makes sense that we need more M&A. And then the juniors, I mean, this is a fantastic time to be speculating in the explorers, right? Not only are they starting to move up now, but it's early in the junior mining bull market cycle, right? Like, I don't know how many times I came on the KE report in 2022 or 2023, and you and Corey kept asking me, when is the junior mining sector going to move? Like, when are these juniors going to move? Well, now they're moving, Chad, right? And so it's like 2 months in, right? It's still early. Like, even the 2020 bull market was like 4.5 months. So even if we're in a super short bull market episode like 2020, we're still not even halfway through the cycle. So I think this is a great time to be in the explorers, and we're seeing some fantastic moves, especially in some of these like silver stocks. If you're an explorer with silver in your name, and especially if you have a resource with a good amount of silver, these stocks are moving.
Well, let's hone in on the M&A point you made just really briefly, just because we have seen a pretty consistent drip of M&A. We've seen some deals this year. We saw actually more deals last year in 2024, and we had quite a few in 2023. Are you surprised at all that all those mid tiers, not just merging to become bigger, kind of like the Equinox Caliber plan, where, like you're saying, two mid tiers try to form a major, But are you surprised we're not seeing more of these development stage companies that have, let's say, a million, 2 million, 4 million, 10 million ounces to find? There's some companies that have literally millions of ounces in the ground and they still are sitting on the sales rack. And some of them have been there for multiple cycles. When you think about the Sea Bridges and the International Tower Hill mines, is this a period where you really expose which projects are just never going to move forward and which ones actually are high priority? How do you look at M&A from the mid tiers and the seniors towards the development stage companies?
Yeah, I think you just made you just hit the nail on the head there, Shad. You kind of stole my punchline. Yeah, if you're a mid tier or you're a large, junior like a Seabridge, right? Like they're still in like the feasibility and permitting stage. Like they don't have their final permits. They haven't built infrastructure yet, so they're not a miner. They're not an official miner. But the resource at Seabridge at KSM is gargantuan. I mean, I can't even think of the numbers off the top of my head, but I think it's like 100 million ounces. Like it doesn't get any bigger than that in terms of gold, silver, and copper deposits, right? It's absolutely like the largest of the large. And if they don't get acquired in this bull market cycle, or they don't go into building their mine here in the next couple of years, I think investors really have to ask themselves, like, what the hell is the holdup here? And with like Seabridge, the holdup is the capex. The holdup is like First Nation stuff. Like I don't follow the company closely, but Canada is not necessarily the easiest place to build a mine in 2025, right? And especially when you're in the Golden Triangle and you're in a far-flung part of the Golden Triangle where roads are going to have to be built, you're going to have to run power lines, a long distance, and et cetera, et cetera. There's a lot that goes into building a mine of that scale, right? So I think in the case of Seabridge, it's like it's so big, it's amazing, it's awesome, but being that big is actually a bit of an impediment because the company that buys it, like they're looking at a $10 billion capex bill to just get that thing started. And I think that is kind of a showstopper for a lot of companies right now. I think like the Newmonts of the world, the Barricks of the world, they're focused more on streamlining their operations and divesting non-core assets and focusing on the operating mines they have now that are in operation, that are in permit. They've already paid for all the infrastructure, and they know they can grow the ounces in the ground. They know they can expand the mine life at a lot of these operations. So they're comfortable just kind of like focusing on that. So I think from the M&A side, just to put it simply, you want to look at large ore bodies, duh, but you also want to look at ones that don't have a prohibitive capex bill. And like, so prohibitive, I think like above $2 billion, like that's where the larger companies are like, okay, this is not going to be an easy lift. We're going to have to borrow some money here to finance, this build out. And then what's the risk? Like what could go wrong in terms of, whether it's First Nations or social issues or environmental issues. Like, so the seniors do all that DD. They do it very deeply. They have their own models. And so really for investors in the sector, you get a free look. Like if a company's not being acquired or they're not advancing to actually build a mine in the cycle, well, you can be sure there's something wrong with the asset.
Do you think that more tier two projects will get acquired then by the mid tiers than the tier ones will by the seniors?
Yeah, I think that's spot on. I think like especially if it's in a jurisdiction where the mid tier already has operations, they'll be much more likely to acquire like a tier two asset and just move that and advance that forward with a smaller capex build that they can digest.
Well, let's talk exploration because it is exploration season in Canada and parts of the US that had been frozen up in the winter. They're thawing out now. I realize that in South America and in Australia, there's different patterns. But if we focus on the North American lay of the land, which I know you swim in those currents, let's just look at the precious metal side first. We'll get to copper next. But if you look at gold and silver, what drill programs really have your interest? Any names that come to mind?
Gold and silver drill programs that have my interest. So I love the Yukon. I think we've talked about this previously. And so like to see Banyan, and Sitka doing so well here right now. And like in the case of Sitka, they're hitting on almost every hole they drill at the RC Gold project, and they're really nice intervals. Some of them starting from surface. Obviously, at the Blackjack, they have to drill deeper. That seems like that intrusion runs very deep, and it has some very high grade areas. And then in Banyan's case, like they've drilled some higher grade intercepts here in 2025. And like previously, like the knock on Banyan is like it's 0.6 gram per ton grade on average, but they have some higher grade zones. And I guess in 2022 and 2023, the focus of Banyan was just building ounces and showing that they have a very big ore body. Well, they prove that 7 million ounces obviously proves that. But now they've polished up their focus and they focus more on the higher grade areas. Like, can we show more intercepts that average above a gram and have good widths, like 40 or 50, meters of a gram plus? And even just a couple months ago, they had one intercept that was more than 30 meters of almost 4 grams gold. So that was very high grade and very impressive. And I think the market has changed its view of Banyan now. Okay, it's not low grade. Yes, it's a very big gold halo, but there are some higher grade zones. Definitely at Powerline, the news that Banyan just had out like 2 weeks ago showed there's a higher grade starter pit at Powerline. That is definitely more than 1 million ounces. I think it's probably more like 2 million ounces. And so that I think changes everything for Banyan, because if you know you can get started there and you can get into higher grade at a gram or above a gram right near surface at Powerline and sort of start the mine that way and get a fast payback that way, that's going to be something that investors look favorably upon. And there's a lot of drill programs out there like Ramp Metals. They just finished their program in late May. We're waiting for the assays there. I'm eagerly awaiting those assays, as I know a lot of other people are. And yeah, there's a lot of exciting programs across Canada.
Well, I know that we should probably shift into copper, where you're also interested in copper porphyries. But before we get into the actual companies, copper itself, I mean, since we've last talked, obviously copper is at all-time highs right now, above 560. If you're a copper producer, you got even fatter margins. But I think the other thing is this is the third time copper's been above $5 just over the last year. And so you're seeing investors get used to a $5 handle on the red metal. Just from a technical standpoint and macro standpoint, anything you want to say on the metal?
Well, I mean, isn't it interesting how Trump says one sentence in passing at a meeting at the Oval Office a couple weeks ago? Yeah, we're going to put a 50% tariff on copper. Yeah, I think so. And it rockets like 20% in like 30 minutes on that trading session, the biggest move in the history of copper. Like literally one sentence in the Oval Office generated the biggest, most violent rally in the history of the copper market, right? And then since then, it's just consolidating sideways at like 550. It's very interesting the way it's trading. It's like the market doesn't totally buy the 50% tariff number. It's thinking it's more like 20%, something around that. And that kind of makes sense to me, that I think the 50% copper tariff, if it really is implemented in August and it sticks for the rest of the year, we're going to see pass-through inflation across a lot of consumables because copper finds its way into almost every part of our lives, right? So, yeah, I think there's been some front running of the tariffs. There's been some stocking up in the U.S. So maybe they can work through the inventories for a couple or 3 months. But then if they're actually having to pay not $5 a pound, but $7.50 a pound, then that's a real problem.
Well, and just from a technical standpoint, if you take the narrative out of it and look at it, copper was above $5 in 2024 back in May, before Trump was in office, before there was anything called a tariff tantrum. So copper has been trying to break above $5 for a while and has done so a couple of times before the latest one sentence rally that was pretty explosive to the upside. You can't take that out of it, the narrative. But when you look at it technically, don't you think that copper has been steadily making progress the last year or two to the upside where this kind of price range was inevitable technically?
Yeah, I mean, it's a beautiful chart. It's a beautiful chart. I mean, look what copper did throughout 2022, 2023, and 2024. It was a gradual series of higher lows, a grind higher, and then it broke out in May of 2024, but then it had a violent pullback back to that $4 level, and it kept finding strong support at $4 a pound. So when a market cannot make a new low on bad news, and I don't know if you guys recall, but wasn't there a lot of fear about China at the end of 2024, and their economy was really bad, and they have a housing crisis, a property bubble, and they're not buying any more copper. I mean, that was the news I was hearing at the very end of 2024. Well, copper did not break under $4 a pound on all that China fear. And then lo and behold, oh, it's not so bad in China. And actually, China's buying copper in March and April, right? And it shot up. It made another new high, right? So bull markets, one of the key characteristics of a bull market is still being able to hold support or make higher lows during episodes of market participant fear or negative news headlines. And copper has done that.
Well, when you look at the universe of copper producers, they have participated, but I've noticed that like something like COPX or ICOP, some of the ETFs, they didn't bounce as high on the second and third rally in copper as they had on the first one last year. But now they're starting to play catch up in a big way as people anticipate better margins for the copper producers. But again, you like the earlier stage companies. And I know you like looking at copper porphyries as far as exploration. So if you put on your
Hercules metals.
yeah. So which ones have your focus, man? Which ones are you looking at?
I mean, if you have a advanced stage exploration copper porphyry project in Arizona or Idaho or somewhere in the western part of the US, I'm probably a fan. I may not own all of them. I can't own all of them, but I'm a fan here, at least from a trading perspective. But I really love Idaho, Shad. Like it's a state that really went dormant from a mining standpoint for 40 years, starting in the 80s. Bill Clinton and his administration pretty much killed the mining industry in many of the states out west, and it didn't come back. And only right now, literally, you're talking about 40 years later, is there a reawakening taking place. So we're like, if you say like with the Hercules new discovery in October 2023, when they shocked the market with a new porphyry intercept, 185 meters of 0.84% copper at their project in Western Idaho. So that was October 2023. So we're not even 2 years into a reawakening. And honestly, it's been kind of slow progress the last couple of years. Yeah, there's a few companies that have entered into the area. Some majors have cut some checks. Obviously, with Barrick, they cut a big check, like $30 million. But other ones like Teck made an investment in Private Explorer Scout, but it's a couple million or $3 million. I don't even recall the exact number. It's chump change for a company the size of Teck. So some majors are just getting their feet wet in Idaho. But my sense is with Hercules, they have a real opportunity in this drill program to prove to the market this is the real deal. Like this is a potentially real economic porphyry in Idaho. And what a great time to make a new copper discovery in the US. I mean, you couldn't be a better time, right? So I kind of expect it's not going to just be a one major show in Idaho. It's not just going to be Barrick. There's going to be other major mining companies who are going to participate in this new emerging copper belt. And look, I say all these things, with a caveat. It's exploration, it's early stage. It doesn't mean it has to pan out, right? There is risk, but I believe the signs are very promising. I've studied this new copper belt basically for almost 2 years now, night and day, and I'm the most confident that I've ever been.
Yeah, it's really interesting because when you think about Idaho, most people thought of the Silver Valley and they thought of silver. And even in Hercules' case, they were drilling through silver when they hit the copper. So it is interesting that this copper belt is being awakened in Idaho. You brought up Arizona, though. Arizona is probably the biggest copper state in the U.S. And I know you're also following some exploration in Nevada that's also looking for copper. People think gold and silver in Nevada, but there's copper there too. So anybody you want to mention from Arizona or Nevada?
Ridgeline, yeah,
Yep.
Ridgeline is a fantastic company. Chad Peters is the CEO. They had their Big Blue Porphyry project, which I liked. It was super early stage. It basically never been drilled before. It had previously been held by Newmont like 25 years ago. They ended up dropping the project sometime around 2011 or 2012. And Chad picked it up. He took a shot at it. Doesn't look like that one panned out. I mean, he had one intercept of high grade, but it was pretty narrow and pretty deep. So I'm not sure that one's going to be advanced. But basically, with Ridgeline, he's got four other drill programs going in 2025 across the state. Three of them are partner funded, so they're funded by majors who have partnered on the projects. So it kind of gives shareholders of Ridgeline, not a free shot on gold, but a low cost shot on gold to make a new discovery in a great mining state in the U.S. And then they have a wholly funded project, which is near surface gold that is oxide gold. So, the grades are not necessarily going to be high grade, like 4 or 5 grams a ton, but if it's near surface and it's gold oxides, a half gram might work if you have enough of it, right? So, yeah, I really like that one. And there's definitely, I'm not gonna mention any of the ones in Arizona because I don't want to hurt anybody's feelings. I definitely like a number of them, and all of them have their positive attributes and have maybe their not so positive, right? And it will take longer to delve into all of that in great detail. But I love Arizona as a jurisdiction and as a mining state. It's the copper mining state.
Yeah, it's definitely got a lot of players in it. And like you say, interesting pros and cons on both sides of the fence for a lot of the projects. But we are seeing a lot of action there, especially with Friedland rattling a saber in that area too. But it's definitely exciting to look at copper, gold, and silver right now, and platinum, as you mentioned. Just as we wrap up, I always think it's fun to do the psychological side of trading. And as we talked about earlier, now that we're in a raging bull market in many of the sectors and in many of the stocks, people that have been used to being beat up for years are going to start seeing gains in their trading accounts, and they should already be seeing them now. There should be people that have a smile on their face. How do you avoid selling too early? What kind of advice would you give people riding through this leg of the bull market where it's still early days in many cases?
Well, I think everybody has to make their own game plan, and I cannot give advice to everybody on this call. But just simply put, if you have a tendency, just your personality is to grab gains as soon as you see some green on your screen, then I think just psychologically, just ask yourself, how am I going to feel if this stock goes up another 50% or another 100% in the next couple of months and I got out of it here? And so once you ask yourself that question, really think about it and think about your feelings and how that might make you feel, and also why you bought the stock in the first place, and the upside that you saw when you first bought the stock. Then you might say, you know what, okay, I shouldn't sell it all. Like maybe I'll sell a quarter of it, just so I can say, hey, I did the prudent thing. I took some off the table. I booked some gains, right? Then also maybe this money doesn't mean that much to you. Maybe you've got a lot of money elsewhere. You own your house with no mortgage. Then why not take more risk, right? Like take a shot at, letting it ride a little longer and see if you can get a really, really big gain. Because just look across the sector at some of the moves, like Titan Mining, which is TI on the TSX. I mean, Titan Mining went from like 60 cents to $1.60 in like a week, right? So we're seeing stocks double or even triple in less than a month here in this market, right? And so why not give yourself a chance to have that, that kind of upside variance in your favor? And then when the profits are so big and it's just smacking you in the face, then you can take some off the table because obviously we know that generally speaking in the junior mining sector, when you have a double on something, you should take some profits. I mean, you don't necessarily have to sell half, but you should probably sell a quarter. Over the long run, that works out pretty well. It doesn't work every time. And sometimes you have a great bear and you sell it at $2 and it goes to $20. But how often does that happen, for real? That's like one in 1,000, right?
Yeah, it's a good point. And I think the people that are doing the whole sell half on a double are going to be shooting themselves in the foot when the things triple or quadruple. But there's no harm in pulling profits along the way on a partial position. You could take 10% as a profit, 20%.
Yeah.
So you don't have to sell everything, but it's nice to see the stocks in the green in the first place. And it's also nice to see some money rotating down the food chain into the higher risk elements of the sector and the developers, advanced explorers, and even the true discovery plays. So nice to see the sector healthy and at least at this point, a robust market. It was great to have you on the show, as always, Robert. And for those that want to get more of Robert's thoughts, definitely click on the links in the show notes down below. It'll take you over to a couple of the different platforms that Robert weighs in on, as well as his own site at Substack and at YouTube. As always, looking forward to our next conversation.
Thank you, Sean.